Why would you? It seems great.
Is that true? I mean, I don't know because obviously.
TV is dying.
Don't what? No, don't, sir. Well, let me ask you a question. In your mind, seeing as I work in television, will I die first? Because if that's the case, I don't mind. But don't you still watch TV, but you just watch it on your computer?
On TikTok, on your phone.
Right, but you understand that that's still TV. It's just you're watching it in a different delivery service. It's like heroin is heroin, whether you snort it or shoot it. It's still an opiate for the masses, as is television. You're just getting it in smaller bites, but it's still TV. We make it. Unless you have the look on your face like, this poor boy. If he only knew the business he was in. Well, I hope we don't die quickly, and stay. And you're here, and we're making TV for you tonight. Welcome to The Daily Show. I'm your host, Jon Stewart, captain of this dying medium. Why would you even say that to me? What did a gentleman tell me tonight? He said, oh, I'm so happy to be here. You know your television is dying. I said, I am aware, and in fact, I'm contributing to it. You're welcome.
Well, afternoon, and we've got, it was a great setup, I think, and Danny's put his foot in it because he threw that to me, and I went, yeah, we should play that, because it's a great sort of example of what we are talking about here today, about what is the future of television advertising and what is television. But we've got three very esteemed guests on the panel today who will know all, and I can't wait to hear what they've got to say. Aimee Buchanan particularly, because she's warned me not to ask any hard questions, so that's wrong. I won't do that, Aimee, anyway. So listen, what we're going to do is talk through, there's been some things that have been talked through this morning that we will recap, but we're going to get the perspectives from agency CEOs. I'm assuming most of you will be aware of Matt Baxter, who was the former and ex-global CEO of Initiative and Huge at IPG, now back in Australia, and I think it's been about 3 minutes' time. We'll hear what you're going to do next. Matt, you're going to announce it on stage. Can't wait for that one. I'll have a news story. That's excellent. So what we're going to do is talk through the agency perspective, the agency CEO perspectives, both on their thoughts on television and how they, what next, and then some of the agency models as well. So the context here for me, this has been sort of running around my mind for a couple of weeks when I was on an earnings call, well, the earnings calls for 7 and 9 actually, but the last one was last week when Nine CEO Mike Sneesby, I asked him about the current ad cycle and is it structural or cyclical, and essentially they said very much cyclical, and there were some good rational arguments for that. However, when you look at the global earnings calls from major advertisers, and we're talking here about L'Oreal, Unilever, Mondelez, Diageo, Gucci, Ford, all of them have reported increases in their advertising and marketing expenditure in the last half of between 11 and 20%. So whilst the media industry is talking about an ad contraction, or some parts, Canada's talking about one of the broadcasters talked about a recession over there, an ad recession, but we're talking about a contraction. We are seeing big advertisers actually talking about their spend increasing. And then when you look at the earnings results from the major platforms, whether it be Amazon, Google, Facebook, or Meta, they are reporting gains of 15, 20, 25% on huge bases. So there's a disconnect here. And so the question I'll put to the floor now, to the panelists now is, and we'll start with you, Danny, off the basis of that video, is do you believe that the advertising cycle is turning and that it's not cyclical, and that the conventional players, whether let's talk to television, they will see an uptick in what's going to happen as the cycle turns, or is it structural?
My contribution was sending that video.
Okay, so we move on. Okay, right.
Look, I think the first part of that question is it cyclical? Yes, it is. The second part is, when it comes back, is it going where it used to go? I think the answer is no. And that's the challenge, because advertising has always gone through cycles of boom and bust, but every time it goes down, I think clients more than ever before are looking at where that expenditure is going. And I think the overall pot will increase, there's no question of that, but it's going into areas not just in advertising but also MarTech as well. And I think that's the key challenge for most of us now.
And we will chase up on that. We'll follow up on that one, Danny. Matt, your take on the cyclical. Now you've got a US and a global view. It's reasonably recent. You obviously weren't media agency in your last gig. It was huge, which was a design tech play. But from where you sit, Matt, globally and here, what do you see?
I think.
And are you on? Can we get him on? Have you switched off to have a private conversation, Matt?
Okay, hold on. Is that better?
That's it. That's
okay. I might have turned it off because I went to the bathroom. Let's talk first about the global trends that you're seeing with big advertisers having their budgets go up. Okay, so if you look at the advertising and promotions budget, say for L'Oreal, I think it's up 11% globally, thereabouts. And there's lots of other examples, but that's just one. The reason those budgets are going up is because brands are having to work harder and invest more aggressively in building out ecosystems for marketing and advertising and promotion than they have in the past, internally. So they're taking budget that would historically maybe have gone above the line or even gone to other departments within their businesses. They're redirecting them and reallocating them to their own efforts, their own data management efforts, their own infrastructure and efficiency efforts, their own performance management and in-house teams. So you're seeing the pie get bigger in terms of the expenditure, but the extraction for certain advertising companies and publishers getting smaller. Okay, so there's an inverse relationship between those two things. They're building their own muscle. As that muscle gets bigger, the requirement to lean on the muscle of external suppliers and partners gets smaller. So there's a counter argument between, or counterweight between those two things that are working together.
But if L'Oreal's saying that its spend, its actual spend in market is up 11%, that's not internal.
Yeah, but it depends where the spend's going. So they're attributing spend often, to Danny's point, into efforts that might be marketing technology investments. They may be partnerships with data partners and other third parties. They're not in what I would describe as traditional advertising efforts. They're definitely still external expenditures, but they're on different sorts of things than we've historically seen. Right? So there's a truth in that relationship between those two things, and I think that's only going to accelerate. Right? If you look at some of the really big tech players, particularly the Googles of the world and the Metas and others, they're building out capabilities and offering kind of partnership-style arrangements with advertisers that extend beyond just simply buying inventory from them and actually buying technology solutions and other forms
Can you give us an example
of capability. Well, there's a relatively sensitive one that I can't disclose too much about.
Go on. Yeah, look, there's two of us saying, go on. Don't name names.
No,
Give us a scenario.
On this one, I definitely can't. But there is a brand that is a big global brand that has brought in, and I'll say who the media owner is, brought in Amazon to be a data exchange and management partner with them, that has a very large component to it in terms of spend, that is not advertising inventory. It is data exchange, it's data insight management, it's platform management, it's a whole range of different services that sit within that particular brand and that is partnered with them long term, almost as if you would an Adobe or any other kind of technology partner.
And that's new expenditure or transferred expenditure from somewhere else to fund that initiative?
It's transferred expenditure from advertising inventory and what would have normally been just spots and dots moved into those sorts of technology partnerships. And so there are examples of that. And I'm talking and I'm going back to my time when I was at Initiative, where I was working with major global brands spending billions of dollars a year on their advertising in multiple geographies, right? We had brands that were spending upwards of $1 billion a year, and they were spending them in 30, 40 geographies. They are completely reshaping the way they deploy that investment, completely reshaping it. And so I think we've just got to be aware that this isn't a cyclical thing. It's a bigger, more seismic recalibration of how brands think about their ecosystems.
We'll just continue on that thread. Let's just let your mind flow a little bit longer before we get to Aimee then. So the implications there for, let's say, television, and we need to define television, right? But let's talk about broadcaster-based to start off with. what are the implications there? Can they counter that? What do they do?
I mean, this is the literally billion-dollar plus question. Can you swim against the current that is as strong as it is right now in these sorts of things? Now, this is where terrestrial media owners and media owners that are operating in single markets and smaller markets like Australia really need to find strength in numbers. And this, I was listening to the panel that was on before us just before lunch, and there's this still thing about, are we all in it together? Are we working together? Can we unify? Can we kind of operate as one single unit? The truth is, the only way you're ever going to be able to counterbalance some of the dynamics of really big technology players who really have the benefit of scale, multiple geographies, billion-dollar plus investment capabilities. The only way you're going to do that is to unify, at least at a local level, and try and pool your effort, resource, and your strategy together. Now, yes, there are inherent challenges with that. Collaboration's a pain in the ass, right? I mean, I've worked in agencies my entire career. Getting one client to get something done, get one app out of one client is a friggin' nightmare. Trying to get one app out for a whole industry, for TV, like Mark Ritson was talking about, that's almost humanly impossible, right, based off what I've seen. So I understand there are huge challenges to getting it done. However, the only way you're going to put something together, lights going up and down, the only way that you're going to put these things together and you're going to be able to swim against this current in any way is to acknowledge that you're better when you combine your efforts than if you try and run your own races and you allow all these fractures to occur in the ecosystem, right?
Some good fodder. Aimee, let's start with the cyclical structural thing and then, start there first. I want to ask you every other question under the sun off Matt, that's all.
Cool. I think it's both. And I think it's both because when you look at the data, like the local data, and I can't speak to the global data, we have seen a fairly big collision of lots of different factors happen. So we've seen an economic downturn, which Danny spoke about. We've seen post-COVID consumer habits shift, and they are normalising and stabilising. We see that, I think, in the last quarter of data, particularly for free-to-air audiences. But I think when you think about the spend data, the local spend data, the media data, all of those total TV channels combined, it's back. It's back 11, 12, 10% last year and will roughly be about the same this year. I think that's because of the moment at time that we're in, where we're seeing things that didn't exist a year ago be commercialised. So if you think back a year ago, Netflix, Amazon Prime, KO Binge, at the scale we have now didn't exist as commercial audience, places to capture audience. That's shifting and that will continue. So I see that going into next year very much stabilised, flat next year, and then into growth, because I think we'll turn a moment in time, and we've seen this in the US, it'll open up new ad markets, small to medium businesses that haven't been able to access inventory in the way that agencies have, be able to. There's pros and cons and ebbs and flows to this, but I think the shift in commercialisation is key. And I think the fact for us is not all video is created equal. And our job moving forward is to stop talking about screens, because I reckon that's the past.
So screen strategies?
It's kind of just table stakes. And I think what we need to be able to do is delineate the role that event versus high quality content versus run-of-mill reach building content is going to play in an advertiser's cycle, campaign and objectives. And I think the emphasis is going to be on agencies to do that and be able to dissect the market in a bit more of a granular way, because we're buying this and we're buying that, and we're buying, it's like never ending.
So you've got some visibility too though, Aimee, on some of the new practices that you're building, and we'll talk a little bit further in around MarTech and so forth, but Matt's point about budgets being shifted to whether it be a customer experience tech stack or deployment or managing all that. Do you think that is happening though? There is some incursion?
That is happening, but I don't think that's the data you're talking about. So I think they're two separate things. You've got the data you talked about, L'Oreal, all my clients that you named, thank you.
Right. So I was correct for once, was I?
Yeah, you were. They are increasing media spend, and they're doing it because it's driving growth for their business, and they've come off largely a really good run out of COVID and continuing to grow those brands. They are also investing heavily in MarTech, and I think it's an enormous part of the ecosystem they're spending money. So I think for once you're all right.
Right. Well, okay, it's not very entertaining though. We want someone to be. I need someone to disagree with Matt on something. Well, you did anyway. That's right. So Danny, The other thing that you talked about before as well is that here we're talking to the industry, but it goes to the MarTech point that that a lot of the decision makers are not necessarily tapping into the media supply chain for what they do with their own businesses. They're looking elsewhere, aren't they? Where are they looking?
Well,
what does it mean?
Well, just last week, Salesforce rolled into town, and that was the biggest show in town. And through the Merkle business at Dentsu, I think we had 50, 60 people there, and we had a look at the attendees. It might even be worth, how many people in the crowd now are from client side?
Sort of says it all, doesn't it?
Yeah, so if you did that at Salesforce, right, you would get C-suite, full marketing teams. You'll see where the shift in thinking has gone. Mm. And what worries me is, have we missed the moment in time, right? You and I were on this similar stage, 2019, and if you look at the agenda for that day, we're pretty much talking about the same things. So I think it's really important that we as an industry in our own ecosystem look at who the key constituents are and are we talking to them? Because otherwise the show will leave town and you're two seagulls fighting over a chip. I think it's really, really important that the key decision makers who are changing rapidly in most organisations, and we see that with Merkle, multi-million-dollar business transformations, digital transformations, and media is just one small part of that. So it's up to all of us to ensure that the consistency of messaging, consistency of measurement. We were talking the other day that, you look at the out-of-home industry and the radio industry, and they are ultra competitive against one another. They will crawl over broken glass to get 1% share. But by and large, they support the medium that they're in. And TV, broadcast, seems hell-bent of trying to destroy each other. And that's not good for anyone. And, was it last week or the week before, the channel in New Zealand that went under? That is a bellwether, right? And none of us need that to happen here. Mm.
Can I go ask you on that, Aimee, what your thoughts are on that? Because you're across the New Zealand market, and so we saw essentially the end of a network, if you like, shut down. And there's been some talk this morning. I know there's been some conversation around, okay, what happens to consolidation in this market? But what becomes? Do you see this consolidation thing as a real scenario?
In Australia?
Yeah.
Yeah, I think it's probably inevitable. I think we've been talking about consolidation for a long time. And when you look at the increased fragmentation and, I guess, dispersion of spend, I'm not sure it's sustainable in this market to continue to fragment further. I think that's compounded by, and I think the thing we probably forget quite a bit is the content that broadcasters are producing. And I think the thing that weighs on my mind in this conversation we had is I think we have a very big responsibility to keep a high quality, balanced ecosystem in this market. And part of that is how we disperse our ad spend and protect some of the big content players that are responsible for keeping news cycles, like you've spoken about in New Zealand, and a more balanced, I guess, well-produced content slate, for want of a better word, and that's hard to measure. And the mechanism to do that is probably the thing that plays on my mind, because if the cost structures of these businesses are enormous, to produce the quality of content that the networks are producing costs, I don't know, 12 times, 200 times probably what it costs for the platforms to distribute all the user-generated content. And I think that's where we need to get a bit more scientific about how we're dissecting that market. And I say it again, like, not all video is equal. And that will show in results, it'll show in engagement, it will show in how your brand shows up. And I think that's what interests me.
It is, and so this morning we can't talk about who, because it was a Chatham House scenario, but it was exactly what you're saying there, and it's fascinating because in the end, you had some very big brands discussing this a little bit, and they're wrestling with the same thing we all are, but in the end they go, we're going to go where the best results, the best. Basically, they're going to follow the money.
But what are the results?
Well, they were. It's Chatham. I know exactly. Well, true. No, I can't talk about if you knew the context of the brand, it would make sense, but we can't do that. Look, the thing here is that, have you got a way forward on that, Aimee? You talk about commercialising content differently. The networks need to commercialise content different. What does that mean?
We're looking at it, and it's not a very good name, sorry Matt, but it's not a great name, but we're looking at it from what we're calling TV-like experiences. So with the lens of younger audiences aren't watching it in the way that can I put you in that?
Yeah, Matt's probably,
Matt looks younger.
He's very fancy.
In the way that we grew up watching content. And I think there's a recognition that they still want and will consume quality content, but it'll be done through a different app or a different way in. But the way that we capture them, by and large, is going to happen on the big screen or going to happen on a device that we can serve an ad. And the quicker we get to understanding what the quality around that is, and we've built a product that enables us to dissect that. And
so you can cut out the quality of the content?
And I mean, it's similar work that Foxtel are doing, I think, to call out one of the players in the room that are looking at quality, premium, however you want to frame it, but a path of content that speaks to a quality of environment that brands want to show up in. And I think that's increasingly going to be the conversation. We used to talk, I mean, you think about the conversations we've had over the years, brand safety, brand responsibility, brand suitability, like where are we at in that? And I think that is the environment matters for me. Like
do you think that lands with marketers though, when you talk about quality?
Well, I think when the measurement's in place, it does. I mean, if you look at the ROI on sponsorships, why are clients still doing big sponsorships? Because they deliver.
I think the interesting thing for me is if you looked at television as a brand, as a consumer brand, right? You guys all have a proposition that you take to clients, and that proposition is television, right? Now, I know there's lots of debate about how you describe and define it, but let's call it just television for the purpose of what I'm trying to explain. If you had that brand in your care, how would you nurture it, build it, grow it, and protect it for the future, which is the purpose that we're here to talk about, the future? And the answer is you'd have a strategy. You'd have a strategy that would focus on core and enduring values for that brand, the benefits that that brand has, the differentiation, the ownability, the credibility, the authenticity, all the component parts that any strong, global, healthy brand has. If I asked all the people in this room some core questions about the brand television and what its core values and propositions and promises to clients really are at the end of the day, that distinguish you, don't define you as other channels are defined, but distinguish you from other channels in the ecosystem, other publishers. Would those answers be consistent and uniform from this group? And the answer is they'd be all over the fucking planet. That you guys would all say different things. Oh, we're really efficient. Oh, you can get great reach. Oh, you can do this, you can do that. You can do all these things. Great, but if you stand for nothing or stand for very many things, it's very, very difficult to build a coherent brand story and differentiate yourselves from super brands. Brands like YouTube, brands like Facebook. You're going up against the strongest brands, not just in your sector, some of the strongest brands in the world. And you don't have a brand strategy. You do not have a brand strategy. You do not have a brand promise. You do not have clear values that you articulate to clients. One of the biggest and most powerful things that television has always had, and it's lost its claim to it. And I'm sorry, I know premium and quality gets bandied around a lot, but you guys were Harbour View prime real estate for brands. You were it. Every brand wanted to live in your neighbourhood. And the shitty neighbourhoods were the other options. And all the big brands who wanted great neighbours, like Qantas wanted to hang out with CommBank, and CommBank wanted to hang out with Coles, and wanted to go to barbecues together in the afternoon in Vaucluse, right? They all went and did that in television, because that's the promise that television gave brands. It gave it premium, prestige, safety, all the things that you just talked about, actually, in terms of brand safety and brand security and privacy and all of these things. Now, that marketplace has evolved, but your core proposition and promise doesn't necessarily need to suddenly go from 0 to 180 and flip. It needs to evolve, but it needs to stay true to its heritage and its core brand.
But let me ask you,
and it's lost that. It's lost it.
But then at the same time, Matt, you also talked in the pre-brief, and we need to get to okay. So what on the ground? What do you think is going to work? What do you see working for this sector? How do they drive growth? But Matt, you talk about broadcast and brands. You're saying that the streamers have got a little bit, with the binging thing.
Yeah,
that's a
they
flip.
fucked it, right? Like, you could argue that the streamers, in my view, almost worked against themselves at the beginning of their evolution. Now, they were very fortunate because they were evolving on a new platform, they were delivering on a need in market, so they got away with a few things. But they actually strategically weren't that well executed, if you think about it, right? This whole binge thing, okay, let's feed the machine. If you want to watch 4 hours of the same show in one go for it. Binge your way through the content. Okay, great. Might make sense from a time on platform, audience engagement, and getting through the content quickly for the consumer as an experience. But thinking down the track for commercialization, monetization, for advertisers and clients, does a binge-based platform and culture work for an advertiser? Versus what television had established, which was a very proven and very actually culturally powerful way of delivering content, which was more episodal, more appointment-based viewing, more event-based viewing, where people looked forward to a certain thing dropping every week at a specific time. It made it more social. It made it more culturally impactful. People talked about what was going to happen for the next 5 days until the next step dropped, right? You look at Game of Thrones.
They've recovered from that, right? So Game of Thrones is good, but they've recovered. They started to
They
flip
have,
that.
but TV had an educational and historical advantage of that knowledge. It knew how to do it. TV knew how to create. Basically, the original social media was television, right? Instead of people posting comments, they were standing around a water cooler talking about it.
So what next then, Matt? So what happens now, though?
Well, because TV has to reclaim its ownership of some of those things. So, for example, this whole debate about brand versus performance and which is the right mix, et cetera, et cetera. The answer is it isn't a mix. It's not a binary discussion. If you have strong brand, you multiply. It's a force multiplier for performance. If you just have performance with no care for brand, over time, the engine gives up. It just seizes up. It's like running
So do both in this medium, is what you're saying?
100%, but you've got to own the discussion about it. You've got to actually be willing to build your brands and your propositions around those things. And I feel like everyone's chasing everything, trying to claim as big a share of the pie as they can, without having a coherent reason for why television must be in the mix and what television really brings to the table. Properly, rather than just all these audience numbers and we've got this rating system and we can do this and that and we can bolt into this API and this platform, and actually having an understanding of what clients are really buying when they buy TV.
So Aimee, can I ask then, does commerce play? Does how does the brand performance and what are you trying to? Can you stitch it up? Can you bring? Can the broadcasters, the television companies bring this together and contribute, basically drive brand and show that they can deliver something in the lower funnel in performance and action? Can you do that?
I think that's been happening for years. I don't think that's new news. I think when you think through the funnel of brand...
Can they prove that? Do they prove it like you might?
Well, modelling proves that. Like
but the industry doesn't own it, guys. You're not talking enough about it. Like the modelling does prove it in a lot of really sophisticated models. In the client world, it proves it all the time.
That was what my question was.
Oh, sorry, I didn't mean to. But no, like you said, it's been happening for a while. All that I'm saying is, like, grab this, guys, because it's your magic kind of source.
Though, like what you're asking is it an effective channel to drive performance? Is that your question?
Oh, well, yes, and then answer that. Yeah.
I think it is. I think the commerce piece is fascinating to me when you look at what's happening here and around the world. I think that's the next horizon that we need to really start to think about, because we're going to end up with 400 commerce solutions that come off the back of every broadcaster. And if you look at what's happening in the US, I don't know if anyone read it, but Walmart looking to buy Vizio, the hardware.
Yeah, well, it's done it, hasn't it? Did the deal a couple of weeks ago, yeah.
I mean, because of the commerce play, and you play that forward here and go, where are we going to end up with Amazon, with potentially Samsung? I think that's what we need to figure out, how we don't end up with 400 different things happening, because I just don't think that's sustainable.
Yeah. And I'm going to come to you in a minute, Danny. But so in terms of the commerce, do you think so? Then what you're saying there, Aimee, is that whether
can
it's
drive full
main
funnel
screen,
impact.
second screen, there's a commerce play that should be done by the industry together with a whole bunch of linkages. Is that?
No, I'm saying I think that either at an agency level or industry level, I don't think it'll happen at an industry level, to be honest. We need to figure out whether it's technology or infrastructure that solves for that, because having 16,000 different commerce integrations into broadcasters is going to get very unwieldy very quickly for clients.
Okay, and so just very quickly, what you're doing on the MarTech side, which is sort of trying to build all the way through the funnel, is essentially what you're talking with. What's possible there, Aimee? Is that sort of the...
From a GroupM point of view? Yeah. We launched Acceleration last year, which is our data and tech consultancy business. I think sort of very interesting. I think what answers some of the discussion today is the fragmentation that's existing. We've basically brought all of our capability that exists into one team to drive active planning through to activation. I think with the view being that we have a single data spine and a single optimization engine across channel, and that's us setting up for, we don't work in a world of this screen, that screen, this screen. We work in an integrated world, and that's the future. And
and Danny, Aimee said that the screen strategy is kind of a bit over.
Table stakes, I said.
Sorry?
I said table stakes.
Table stakes. Sorry, you move on from it. Yes, table stakes. Need more. Okay, is it table stakes? Screen strategy is baseline, but also the commerce. And the rest of what Aimee talked about. We're running in.
I mean, the challenges that broadcasters face are, multiplied across agencies as well. And how do we stay relevant over the next 4 or 5 years? How do we change our business model? How do we make sure we automate as much as we can? I think for me, it's becoming part of that MarTech conversation and being at the centre of that. That's really, really important. But I know we're going to run out of time, and I think it's important to finish on a positive. And I think there is light at the end of the tunnel here, and I think we should look at the music industry. If you think about what they went through from when Napster started killing them, LimeWire, and then into iTunes, that industry was completely on its knees, right? And I heard a presentation by one of the record label heads once, and he said, we had to go through the 5 stages of grief to get to acceptance, right? And what that meant was we're never going to have the same business model we had before. We might not be as profitable as we were before, but there is a strong future, solid business here. And I would suggest if we look at where the music industry was early, mid-2000s to where it is now, it's transformed its business operation. It is ridiculously profitable, maybe not 90s CDs profitable, but it is still profitable, and it's found new ways of making money. We're still producing enormous amounts of quality music and bad music as well, but that's always been the case. And I think TV and broadcast can look at that and think, yeah, there is a way out of this.
So they've got to buy Spotify to save them? Is that what happens?
No. Well, you'd think Spotify would wipe everything out, but it's not, right? They've just changed their model, and they went through a lot of years of really hard work to get to where they are today. But again, that thing about acceptance, getting to that point and realizing that the market's changed, it's gone, it's never going back to the way it was. Clients are not going to think in the way they used to, but there is still 7, 9, I don't know about 10, but there's still really profitable businesses producing great content run by really smart people, doing great work every day, and we should not forget that.
No, but the market is a little bit. Like the market's not running with that, right?
If you walked across most agency floors right now, the vast majority of people are spent buying broadcast. It's still happening.
I can't ask any more questions because we are absolutely over, and Justin's going to whack me. So we say thank you and clap. Thank you very much. Thank you, people.
Yep, that's good. Yeah, you can leave now. That was a brilliant way to summarise that panel, Paul. So I feel as though that the course of the event today has sort of been led up or leading up to the sort of this measurement session that we put together, and it's caused me quite a lot of headaches putting it together to try and decide how best to present it all. So what we decided to do was to look at the 4 or 5 innovations that are occurring in this market, the changes, some of the announcements that you heard today from the table sitting right in front of me, and have a look at them. They've got short presentations. They'll get a question from me. Then we have Karen, and then we finish up with a bunch of buyers, and we have a panel to decide exactly how Australia is going to move forward within the measurement space. Kicking it off, he can no longer rely on the lovely Nat Harvey. He has to come here and do it himself. Ladies and gentlemen, it's actually the first time that Kurt has presented on his own at this conference. So please, ladies and gentlemen, let's give it up for Kurt Burnett, Chief Sales Officer for Seven.
First time presenter. Go
Yes,
gently. Thanks
just
very
a-
much.
just a
Yeah.
panel.